The Small Business Jobs Act of 2010 was signed into law on September 27th. The legislation is designed to stimulate job growth, in part by providing a number of tax relief provisions that target small business owners. If you're a business owner, you're allowed to deduct the cost of capital assets that you purchase for your business. Typically, you deduct part of the cost each year based on a depreciation schedule. For qualifying property placed in service during 2008 and 2009, an additional 50% first-year depreciation deduction was allowed. Effectively, this additional first-year depreciation enabled business owners to significantly accelerate the deductions that resulted from capital expenditures. The good news is that the Small Business Jobs Act extends the additional first-year depreciation deduction for 1 year. The bad news is that the deduction only applies to qualified property acquired and placed in service during 2010, so there's a limited amount of time to take advantage of the extension. Internal Revenue Code Section 179 allows you to deduct or expense the cost of qualifying property that you acquire for use in your business in the year that you purchase it, rather than over time through depreciation deductions. In 2008, 2009, and 2010, the maximum amount that could be expensed under Section 179 was $250,000, and for 2011, the maximum amount that could be expensed was scheduled to drop to $25,000. The new legislation increases the maximum amount that can be expensed under Section 179 for 2010 and 2011 to $500,000. It also temporarily expands the application of Section 179 to include up to $250,000 for certain improvements made to non-residential buildings and retail property, as well as qualified restaurant property. The Small Business Jobs Act makes other tax changes as well. Subject to certain limits, individuals will pay no regular tax or alternative minimum tax on the sale of qualified small business stock acquired at regular issue after September 27, 2010, and before January 1, 2011, provided the stock is held for at least 5 years. Eligible small businesses will be able to carry back excess general business credits up to 5 years instead of 1 in 2010. And for 2010, self-employed individuals will be able to deduct the cost of health insurance for themselves and their families in calculating earnings for purposes of self-employment tax, as well as for regular income tax purposes. Additionally, starting this year, the substantiation rules and depreciation limits that apply to the business use of cell phones are significantly eased. Other changes include a temporary increase in the deduction available to businesses for startup expenditures and added flexibility in taking distributions from annuities. Not all the news is positive, however. For example, with some exceptions, starting in 2011, if you receive rental income from real property, you'll be required to file an information return when you make payments totaling $600 or more to a plumber, painter, accountant, or other service provider for rental property expenses. To understand how the Small Business Jobs Act affects you, talk to your financial professional. Remember, new rules mean new opportunities. So understand your options, ask questions, and start planning now.